Hi there folks, this is Sean Broderick for the Oxford Resource Report. Well, today I have a bunch of charts for you which I think are pretty interesting and show what could happen next week, or rather what stocks, what funds you might want to be concentrating on next week. Let's start with a chart of the 10-year Treasury note yield, also known as the TNX. As you look at this chart, you can see that it has cleared a 5-year resistance line extending back to 2007. What does this mean? Well, this means we should look for bond yields to head higher and bond prices to head lower. Now, this generally happens when things like cyclicals, like cars and stuff, tend to be moving higher. And sure enough, my next chart shows exactly how that's looking. AutoNation. Now, this is a good-looking chart. This is a company that is basically in the car dealership business. And I've bought cars from AutoNation before. Probably you have too. And if you look at this, you can see that it has some incredible bullish volume. It's heading up toward overhead resistance. And so we don't know if it'll break out of that resistance, but if it does, my target on AutoNation would be $64 a share. There's a lot of other bullish stuff about this, but basically it's moving higher as Americans shop for cars. And so as that's happening, that's increasing the business for it. It's not just AutoNation, it's pretty much all the car companies, including the car manufacturers, Ford and GM as well. They should do very well because of the cyclical trend that is in place. But that's not the only place you can look for profits. Let's look at another one. Recently on my blog, I said that my favorite natural resource right now was the sun. What I mean by that is solar stocks. Let's look at a chart of TAN, or the Guggenheim Solar ETF. As you can see, this has a pretty regular cycle where it runs up for a while and then pulls back, and runs up for a while and then pulls back. And the distance between those bottoms is about 40 to 41 days. And so we just recently had a bottom at the same time that TAN is breaking out. And this is happening on bullish volume, and it's outperforming the S&P 500. Now, it's not just TAN. Pretty much all the alternative energy ETFs are looking very good right now. And there's a whole bunch of solar stocks in particular that are being moved along by many estimates that we're about to see the next leg of the solar boom here in the U.S. And that looks awfully good for these companies. So TAN looks like it's going to have a breakout. It could go much higher, and so that's one that I would consider playing right now. And the last one that I want to show you is the XOP, the Spider S&P Oil and Gas Exploration and Production ETF. Now, if you look at the XOP, you can see that, again, it's heading up toward overhead resistance. It's doing it on bullish volume, and it has bullish momentum with room to run. If we see a breakout here, that would give us a target of $82 on the XOP, and that would be a pretty darned good move. What's moving this? Well, of course, higher oil prices. For a while, you can see that the XOP and many oil stocks sold off, even though oil prices went up, because people figured, well, that's as good as it can get. Now we're seeing oil prices break out to the upside, and so people are saying, you know what? This isn't as good as it can get for the oil companies. It can actually get much better. If you're looking for an individual name, one like Rowan, symbol RDC, that looks good. But this, as with anything that I've talked about here, do your own due diligence. I'm just a guy on the internet who's telling you about charts that I think look good. For your own investing destiny, you have to do your own due diligence. This is Sean Broderick for the Oxford Resource Report. Thanks very much. And next week I'll be back to talk to you about gold and all sorts of stuff. Bye-bye.